Our today's webinar, it's about LuxReal and ESG. That's our topic of today. We have 110 registrations for today, and I'm pleased to welcome you again in our role of seminars. It's the third seminar after we had the first one a couple of weeks about COVID-19 impact in Luxembourg, followed about legal considerations related to our special situation. And today we would like to raise your awareness about ESG in real estate. So we know that deriving from the climate summit in Paris a couple of years ago, goals have been set related to climate change. It's about reduction of emissions and the carbon footprint in our today's world. It's as well about the establishment and the definition of benchmark and methodologies and standards related to sustainability. So ESG, for those who have maybe not so much heard about the acronym E stands for environmental, and it's related to climate factors. S stands for social, and it's related to human factors. And the G stands for governance. It's about rules and principles. So what can you expect in the 30 minutes, no, the 60 minutes we are with you today in a webinar? We will not talk about the taxonomy, which is more related to EU regulations. This we will leave out to others who are better placed than us related to that. But we would like to bring closer to you to associations who are working in that context on an international basis. We are very glad to have a representative of GRESB with us. And we have then drilled down to a Luxembourg level, a representative of LuxFlag with us. And we are glad to have with us a representative of BNP Real Estate Investment Management, who is more a product designer in that context, a user of both associations. And this brings me to the point where I am happy to present you, my dear panelists of today. We will have, in that context, today 30 minutes more or less of presentation, 10 by each of my panelists, followed by an interview of 30 minutes where we discussed a variety of questions among the three experts. So to start with, I'm pleased to present today Roxana. Roxana works as a director at GRESB. GRESB, she will present herself a bit further, is setting standards. It is mission-driven and investor-led. So GRESB is an environmental, social, and ESG benchmark for real assets. They work in collaboration with the industry to provide standardized and validated ESG data to the capital markets. So Roxana, thank you for joining us today. The second panelist and presenter will be from LuxFlag. So we have Sachin Vankalas, who is general manager of LuxFlag, and he started nearly a year ago. Sachin has been leading the operations and the sustainable process at LuxFlag since 2011, acquiring a deep knowledge and expertise in the sustainable investment market. So welcome, Sachin, to join the panel later on. Last but not least, we have now the expert coming from the industry. I'm pleased to welcome Laurent Ternisien. Laurent Ternisien is the CEO of BNP Paribas Real Estate Investment Management in Luxembourg. He is leading and running the Luxembourg office, and he's in charge of the expansion of the Luxembourg related company. He is a CEO, and also he develops the global activities related to capital raising and client relationship of BNP Real Estate Investment. And we are keen to hear and to listen to you, Laurent, what you get out of talking to the industry, to the investors. What are investors' expectations in that context? So having said enough now, Roxana, the floor is open to you. I'm happy to give you the opportunity to present GRESB and what you do related to ESG in that context.
Thank you very much, Sven, and thank you for the introduction. I'm going to share my screen and should.
Perfect.
Is it? Yes, it should be full screen now. Well, thank you, and good morning, everyone. It's very nice to actually be with you and be part of the conversation with you again. I wish it could have been in Luxembourg as initially planned. Always nice to be there, but I guess we all have to adapt during these times. And what I really appreciate, if there's something to appreciate in this unusual situation, is the fact that we can connect more easier, and we can talk to each other and interact with each other much faster. And so, following your introduction of ESG, Sven, I would like to start by pointing down or pinning down a little bit, what do we actually mean by environmental, social, and governance aspects within the real estate field specifically? Because you're right, E stands for environmental and environmental factors. And when we think of the impact on the real estate industry, of course, everyone's talking about the impact of climate change and how do carbon emissions translate into carbon change, and how do carbon emissions result from energy consumption, and how do we improve energy efficiency, but also water efficiency, waste management. So effectively, all environmental aspects of what a building can produce and the environmental footprint that a building can produce, this is all captured under the environmental aspects. The human factor captured by social can be translated into, well, the humans with the most impact or most interaction to the built environment. For a real estate owner or a landlord, of course, the most important, or one of the most important stakeholders are the tenants. So when we think of social aspects or social performance of a real estate landlord, we need to evaluate their work and their performance through the perspective of its interaction with the tenants, but also through the interaction with their employees as an employer. The impact on the community surrounding the assets, but also the wider impact on a more macro level. So there are, and perhaps this is not an exhaustive list, of course, there are always more things we can add to this. And as ESG as a field and as a topic progresses, we get more insights into what we can measure and what we can evaluate and how these elements interact with one another. And in fact, the governance of sustainability and governance in general does exactly that. It provides the rules and principles, as Sven put it, of what is proper environmental performance, what is proper social performance, and how the companies are meant to be set up in order to increase their social equity, to be an equal opportunity employer, to provide equal opportunities to different social categories and so on. And in fact, this is what GRESB does. We evaluate the environmental, social, and governance performance of real estate portfolios. I will only talk about real estate because my role is focused on real estate. But GRESB as an organization, which used to stand for Global Real Estate Sustainability Benchmark, now we're just abbreviating it to GRESB. We exist to assess and benchmark the ESG performance of real assets. And we do that for real estate. We also do that for infrastructure assets, with the purpose of providing a standardized and validated data set to institutional investors, to banks, to endowments, so basically to the capital markets. So we look at the spectrum of all of these ESG criteria and everything that that's encompassed under the ESG spectrum, and we identify what is material for real estate, what is material for infrastructure, what could be material for different asset classes, and we identify the right metrics to measure the performance against those elements. And having done that, once we identify that, we collect the data from the real estate managers, can be real estate funds, listed companies, special purpose vehicles, JVs, any type of vehicle. We collect the data from them, we validate it, we analyze it, we benchmark it, and then we provide it to their institutional investors. And this is just a snapshot of some of the longest-standing institutional investors that have been using our data and have been helping us develop this framework of measuring ESG performance, but also interpreting the results. That's not to say that only these logos and only these names are interested in ESG performance worldwide and do a lot on ESG. There are a selection of some of the names that we work with more specifically. So GRESB itself was also created by institutional investors. It's an investor-led initiative that's meant to standardize the engagement on non-financial data. It's meant to structure non-financial data in a way that can be interpreted and compared across vehicles. So institutional investors want to have insights and want to understand what their investments are doing. Of course, they could be doing that themselves, each of them individually, and many of them still do and have their own due diligence processes. Or they could be using a more standardized way of looking at these elements, and that's when they come to GRESB and use GRESB as a tool for engagement and data insights into the fund managers that they work with or the listed companies that they work with. And so on. And that provides a comparable way of analyzing investments, of course, in a similar way that you would do for any other type of performance. I would say that one of the core principles of our work, and something that we believe to be very important in a field like ESG that is still widely unstructured and unregulated, and well, I wouldn't say not documented, because that's becoming much more structured. But the reality is that ESG activity and ESG performance is still widely non-regulated, and so there are many frameworks out there, and I will explain a little bit the landscape, because I think everyone is familiar with a lot of initiatives these days, and new initiatives emerge on a rolling basis. It can become difficult to keep up with all the different acronyms and abbreviations. But what we believe to be very important is that the ESG data is validated and checked for accuracy before it goes into any type of analysis and before it is used for investor making decisions. So that is why before we score any information and before we put out any reports to the institutional investors, we spend a lot of time validating the data that comes to us, applying outlier checks, applying all sorts of levels of scrutiny to ensure that the information that comes out of these reports can be trusted and is reliable to the highest extent possible. And in fact, this is what you would be doing with the financial data as well. We are not only working with institutional investors and the managers themselves. This is the ESG space is quite is varied and is expanding on a regular basis, and I think we will hear from both Sachin and Laurent about the different perspectives of the data uses. For an ESG benchmark like us, it is important to have the institutional investor perspective as the data users, the fund manager perspective, or the private equity or the REITs perspective, so the data givers. But in between, you also have many organizations or many players that help structure this data. And I believe we will also talk a little bit about the challenges of collecting ESG data, the challenges of structuring the data and interpreting it in a consistent way. The reason why I included this slide is just to give a feel of all of the different perspectives or the different types of organizations that are interested in ESG data and that use it for decision-making purposes. Of course, we are not the only ones that are doing this. As I said, there are many other frameworks, organizations that that provide guidelines for ESG reporting, that provide requirements for ESG data transparency. There are certifications at the building level as well as the organizational level, corporate level. And each of them have their own piece of the market, and they have their own space in the market. We're somewhere in the middle where we try, where not only do we try, but I think we succeed that in a nice way to actually work with different perspectives and the different types of organizations out there to get the perspectives of all of them and basically leverage the experience that we have with the experience that they have and try to create an ecosystem of of consolidated information. The danger with the ESG information these days is that there are, with a lot of initiatives, you have a lot of requirements or a lot of guidelines, and if we want to standardize the way that ESG data is collected, monitored and interpreted, then we do have to centralize all of these frameworks and come up with consolidated ways of looking at some of the same data points. Danger is that we diverge from one another, and we end up confusing, or the stakeholders altogether end up being confused of what's relevant and what's not.
Roxana, we are a little bit time short, so if I can.
I was going to end with this because I know Laurent and Sachin will pick up on some of these points. So perfect timing. I will stop sharing my screen now.
Great. Well, so far, thank you very much, Roxana. Was a very good starting point for today on an international level. And now I'm happy to invite Sachin to now drill down what's going on in Luxembourg, what has Luxembourg developed related to sustainability, to ESG, and now coming to ESG sustainability in real estate. Floor is yours, Sachin, please.
Good morning, Sven. Thank you very much, and good morning, everybody, for joining us this morning. Now, what I'm going to cover basically is a little bit on what is sustainability in general, but also going more detail on the side of. Just give me 1 second. I'm just trying to upload the presentation. It seems to have a little bit difficulty. So what I'm going to cover is the relationship between ESG and sustainability in general, but also what factors generally it would include. It would include from ESG perspective in real estate as such. So just going before, do you see the presentation now, Sven?
No,
Okay, just give me 1 second again. I'm sorry. Seems like there is a presentation problem. Yeah, now you see it?
right, it's coming up, yes.
Yeah, okay. That's very good. Okay, so what I'm going to cover is a few points. What is a sustainability or sustainable finance in general? What kind of relevance it has to a real estate sector? How can real estate actors apply this practically? And then what role LuxFlag or Luxembourg plays in general in this side? Well, let's speak about sustainability in general. Sustainability or green or ethical or responsibility, all these words are these days very fancy. Very, everybody is trying to be more sustainable, more responsible, and there are certainly a lot of very valid reasons to do that. But just going back to very basics of what is sustainability, well, sustainability refers to the practices that meet current resources needs without compromising the ability of future needs. Meaning we live up to the stage, or we use those resources only which are available, or which are needed, but without taking into any risk of taking something in, let's say renting something or grabbing something from the future. Very, very simple and very straightforward definition. But when it comes to sustainability on the organizational levels, organizations understand sustainability very, very differently. Often, since not everybody relates to sustainability in an organizational level, somebody from finance department might consider sustainability as just simply a cost, or somebody from resource and development department would consider this as a long, costly, risky innovation process, or somebody from marketing would consider it as a branding opportunity, because everybody is talking about sustainability, everybody is talking about ESG these days, so why don't we create an opportunity from that side? From customer side, from people on the streets, well, this is just simply a corporate, one more corporate lie, or one more corporate element where corporates do this in order to get more visibility, and that's what generally is called greenwashing also, is that claiming or lying about something, particularly on how the activities are relevant to environmental green, and that or building on business on that. So what I wanted to say here is basically sustainability is understood very, very differently across organizations and within organizations, depending on the role people are in. Now, if you don't have sustainability understanding within the organization, you often want to be dependent on external organizations, such as, for example, certifications, and then you get into such a big, let's say, vast variety of different understandings and different definitions that you get, in some cases, you really get mad about what is true and what is not true, right? There are so many of these certifications which grant or which claim organizations, corporates to be sustainable, to be green, products to be green, that as a customer, at the end of the day, you might get confused rather than getting any solution out of that. So you cannot really be dependent on a sustainability outside. So that's overall a brief idea about sustainability as such. But referring to sustainable finance as such, is sustainable finance is a theme where you consider E, S, and G factors into your investment decisions. As Roxana was earlier mentioning, for real estate side, how ESG factors are there and what should be considered. Like, for example, in environment, you would consider more on the energy side. Why you would consider energy side on environment? Because let's take an example. Real estate is a quite significant industry. It's about value of real estate is estimated roughly around 217 trillion worldwide, which is about 2.5 times of the GDP worldwide. So the value of real estate is absolutely super big in numbers, whereas the real estate industry uses about 40% of energy worldwide, about 40% of energy, also contributing 20% of greenhouse gas emissions worldwide, meaning the real estate as such, be it commercial, be it residential, altogether is one of the huge contributor to the global greenhouse gas emissions. Meaning certainly working on energy, working on eco-efficient buildings is certainly a main factor while defining the sustainability criteria or sustainability credentials of real estate. But as Roxana mentioned earlier, it's not only about environment, it has a lot to do with social also. Let's take an example of the current current health and economic issues which we have around COVID-19, how real estates, how properties, how property managers are ready for this disaster, or do they have any contingency plan in order to prepare or to sustain in these difficult times. So those type of issues are certainly also considered in on the social factors. On the governance factors, more about the standards, more about the policies, more about the independence of that ownership structures. All that could be considered as ESG factors in the real estate. So within the sustainable finance side, certainly there is, as earlier Roxana and I'm saying, sustainability certainly refers to real estate as such and the factors which we discussed earlier. Now, why all this? Well, one of the main thing, or one of the main driver of, let's say, sustainable real estate, or in general ESG in real estate, is investor demand, meaning following money. Basically, if your investors are requiring you to do or report on certain ESG analysis or sustainability analysis, you would certainly be forced to do so, right? On the other hand side, the highest nature of the contribution of the real estate as a sector into global emissions is certainly one of the main factors. I also mentioned earlier about the other social factors or governance factors, but one of the major reason as such we have is also issues around climate change and how real estate sectors can sustain into that whole issue around, or challenges around, climate change. Now, with all this taking into mind, what does LuxFlag do? We are a labeling agency. We are a certification agency based here in Luxembourg, created in 2006, as opposed to GRESB. GRESB does labels or certifications for properties themselves, whereas LuxFlag does labels for financial instruments, financial products, be it funds, be it other type of financial instruments, which are active in the field of sustainable finance. So that's the key difference between GRESB and LuxFlag. Now, what is a label? Well, label is a unique tool for asset managers in order to promote, or in order to showcase their sustainability or ESG credentials, whereas for investors, it's a tool based on which they can make their investment decisions, meaning a label fund, let's say sustainable, a fund which has a label called sustainable real estate. What does that mean? Well, this means that the fund is in compliance with certain best market practices and is committed to develop their activity in that particular field further. We have been one of the key reference agency for sustainability or ESG investing in Luxembourg, but also on a broader level in Europe for over a decade now. At present, we label 196 products domiciled in 7 different jurisdictions, and there I want to highlight, of course, is since there is Lux in our name, LuxFlag, often it is confused that the LuxFlag works only for Luxembourg funds, or is working with Luxembourg funds. That's not true. We do have labeled funds representing different jurisdictions such as France, Belgium, Germany, Italy, Ireland, Netherlands, and of course Luxembourg. These are managed by about 88 different managers located in 16 different countries. One of the examples is, of course, BNP Real Estate, which Laurent will speak a bit later on. So LuxFlag has been working in this field for over 14, 15 years, and is recognized on a broader scale in a number of other jurisdictions also. And now going back again, we have witnessed quite significant growth in last 12 months on our ESG label. Of course, the labels are based on certain criteria. A fund or a financial instrument which want to get the label should be going through certain analysis, should be submitting certain information to us, will go through certain analysis, and label then is awarded for a period of 12 months or so. So again, label is a kind of a marketing tool. in one sense. Other sense, it's also a benchmarking tool, so that the label product can showcase its let's say sustainability credentials as such, or ESG credentials as such. I would maybe stop there, and then we'll cover the later on the questions.
Yeah, great, Sachin. Many thanks for your presentation, and again, thanks for being precise that LuxFlag is a label made in Lux, but we retain it's not made for Lux domiciled funds only. Any other jurisdiction can go for that label, provided and evaluated in Luxembourg. Yeah, great. So this is a good intro coming from GRESB to LuxFlag. Now I'll pass on to you, Laurent, you as representing a global firm, setting up funds, setting up products. We are keen to hear what does ESG mean for BNP when they talk about real estate funds, and at what point you lean on opportunities provided by GRESB and LuxFlag. And this, in the general context, talking to investors, you might have a good view what investors are looking for today. Thank you for your presentation before we then start our joint interview.
Thank you, Sven, and thank you, LuxReal, for the invitation. I think the topic is extremely important, and I'm glad that we've got this discussion today. Just a few words, perhaps, on BNP first. BNP Paribas Real Estate Investment Management first, to understand why we are where we are coming from. So we are a pure European player in the investment management of real estate assets. Altogether, with 30 billion of real estate assets under management, focusing on Europe, meaning being present in 17 different countries altogether. And one of the specificity of BNP Paribas REIM is the fact that we serve two community of investors, at the same time the institutional investors with more than 220 different institutional clients, and individual investors, meaning the retail market, with more than 140,000 individual clients altogether. It means, and I think that's important, because obviously, in fact, we are there to deliver performance to our investors and to manage the money of investors. And as such, particularly on ESG matter, we can do the best by ourselves, but also we are dependent on what our clients, the end investors, want. So I'm coming back to that because for BNP Paribas REIM, as you see on the graph on the left side, we've got three type of clients. The institutional investors we serve as well, either through discretionary funds for 1/3 of our assets, or through mandates where they've got we do what they want us to do. And the final third is about private investors, and ESG is not taken in the same way depending on the type of investors. I also put on the right side of the graph the different asset classes we serve, because I think in fact it's one of the specificity which differentiate real estate from the other asset classes. We've got access to the underlying asset. We can act more than in fact our colleagues managing bonds or managing equity. And that's an important dimension to keep in mind. Keeping again in mind the fact that the type of action we can do is different from one asset classes to the other. For example, residential. On residential, it could have a strong social impact depending on the type of residential you can manage. Or healthcare, we are one of the specialists in healthcare management. On offices or logistics, it will be different type of approach, probably more related to environment where we can act. So depending on the asset classes and the client, ESG will have a different impact. At BNP, ESG starts at the level of the bank itself. And that's what you can see on this slide. The BNP Paribas group as a whole, on the top of the green logo of BNP, has a very, very strong commitment on ESG matter. The CSR strategy starts with 4 pillars that we have identified. The first one being economics, second one environmental, third one social, and the last one on civic responsibilities. At BNP as a group, we have also transformed that into 12 different objectives that have an impact on all the different business line of BNP and are fully aligned in between the different entities. And as an example, for example, we have defined business sectors which are more sensitive and will be excluded. So which has a direct impact on the tenants, for example, who will take on board or not in our real estate portfolio. This first level of the group, BNP, is declined at the corporate level of BNP Paribas REIM. And here we have defined our own CSR policy for BNP Paribas REIM in line with real estate, in line with the group as a whole. And we have fixed some very specific objectives for our business as a whole. In fact, they were fixed in a bit more than 5 years ago with which they're called Inspire Real Estate 2020. So we are at a turning point where we can see what we have done on these different objectives. We fixed 14 objectives and a lot of them have been achieved, but a few are still in progress, and we are monitoring that very, very carefully. The third level of actions on our products themselves, the product we manage, meaning the funds and the portfolio we manage. And here, I will say we've got 3 types of approach. For all of the funds we manage, we've got a certain minimum level of ESG criteria we follow. For example, before buying an asset, we have an ESG grid that we will complete, and during the investment committee, it will be reviewed, and it could lead in certain point on exclusion. We have also, in fact, certain rules linked with the management of the asset for all of our funds. On the top of that, for specific funds, and I'm thinking here, for example, of our Pan-European Office Fund, which won this year the award of from REFI on the most environmental fund. Here, we've got a best-in-class approach. Best-in-class meaning that in that case, we will buy buildings which are very green, either already with a label or a certificate, or we will ensure that we will have a certificate for this building. It's the same with our logistic funds and same with a few other funds. So we have defined, we are at a level above that. And in that aspect, in fact, we are working obviously with GRESB to ensure that these funds are well positioned compared to their peers, or we are working with Sachin and with LuxFlag to ensure that the fund itself obtain a label. And there is a third level, which in fact is for at least for the time being only on one of our funds, which is the impact dimension. So it's funds where we want to have an impact. On the top of the performance we will deliver to our clients, we define together from the start of the fund the impact we will have on the ESG matter. Some of these funds, there are very few in the market today in the real estate sector. Some of them are focusing on the social impact, particularly residential. Our fund that we are launching will be focused on climate impact, ensuring that we will respect or even being better than the Paris Agreement on in a carbon emission and saving of carbon emission. And if the previous category I was describing was much more on the best-in-class approach, this approach, impact investing, is much more linked with best-in-progress. So our ability to improve things, not only to buy the best, but to buy, in fact, probably something which is not so good that we will improve over time. And the translation of this in our day-to-day life is around these 4 pillars that we've got in our ESG strategy. The first one is our ability to measure. And it's not the easiest one, and I'm sure we will come back to that in a minute during the discussion. Ability to collect the right information and to measure what we are doing is the key, and it is something that starts from the acquisition of the asset to the disposal of the asset. And it's measuring at asset level, but also at portfolio level or at corporate level, obviously. The second pillar is, in fact, making sure that we've got clear objectives. And that's the second stage in our approach, to ensure that for all of the different actions we can have, we've got an action plan, we've got clear objectives and achievable objectives. And as an example, in fact, I mentioned the screening of the asset. Fourth pillar is the ESG integration within the business. And it's for a business like ours, we will be able to achieve things only if we've got an engagement from our staff and from everyone within the BNP Paribas REIM, starting with the asset manager, but also, in fact, the one talking with the client, also the fund manager. So it's and obviously, in fact, the member of the executive committee. It's we will be able to achieve some things only if we've got a full engagement on this topic. And the last one is our ability to analyze the progress and to communicate our progress, both internally and to the overall community, all the stakeholders we have, meaning obviously our clients, meaning our tenants as well, and meaning, in fact, the general community we are talking to. That's what I wanted to say briefly.
Great. Thank you all for your presentations. Time is flying by. We try to make most out of it, and this brings us now to our open questions to our panelist interview session. And my first question would be, when it comes up to the ESG reporting, which challenges are the asset managers facing related to the data sourcing? Because we heard a lot about theory. Now, concretely, what are the data to be considered? How are they collected? And then there will be the reporting. Maybe to start with, maybe Roxana, would you like to share your view and your experience on that to be a bit more precise on an asset level basis?
Sure. So you mentioned asset level basis. When we talk about assets, the first thing we think of is environmental data. So I think all presentations touched a bit on what we understand by ESG data. And of course, the challenges are different in sourcing and structuring each of these categories. On the environmental side, so of course, the energy consumption, carbon emissions, water, waste, perhaps also materials, building certifications, even things like floor areas. The floor areas of buildings are even something that that there are a couple of international standards that prescribe how should everyone measure the size of buildings, but they're still not, this is still one of the biggest challenges in the industry and one that poses problems. So I would say the main challenges come from the lack of international standards that prescribe the right way to measure things. The second challenge comes from the fact that a lot of the data comes from the tenants, or needs to come from the tenants, of course. And so unless the relationship with the tenants is not very good or is not very well defined in contracts up front, it is quite difficult to get into the buildings and get more information about it, about the buildings. And Laurent touched a bit on it as well.
When you're talking about measuring, sorry to interrupt, but completely on an asset base, if it's maybe you have office buildings, you have hotels, you have logistics. So I think the consumption of energy differs tremendously among those asset classes. So let's maybe say, for example, hotel in the US, Florida, it's warm outside, you have the aircon running all the time. Maybe technology is not at a very high level related to consumption. So what is it? Is it energy? Is it water? Is it emission? Are those the drivers for the reporting?
Those are the most quantifiable elements of reporting, and everybody's focused on energy because it's the source of data that allows you to calculate carbon emissions. And of course, the consumption values and the profiles of buildings will be different depending on the property type, so the sector, as well as the tenant that uses them. Even within an office building, the environmental footprint of a lawyer's office will be very different from the environmental footprint of an investment bank or a data room, for example. Yes, Sachin.
I would just like to add there, I think it's not only about the differences between the users or the consumptions of different users, but it's also about the very methodology. How do you calculate that GHG emissions or carbon footprint of a company or a property? Even in that, I mean, because we don't have one global methodology to calculate calculate carbon footprint of a property. So even that, depending on who and what basis is calculating the carbon footprint, the reported GHG emissions might also differ.
And that's where GRESB, for example, is setting a standard related to what is the framework of those data, or
well,
what is accepted by the market?
If you look at the supply chain of the data points, I think you have problems at every step of the way. You have problems with sourcing the data to begin with. You have problems with evaluating the data once you have it to ensure that it's accurate, complete, to have a good idea of its lineage. So where does it come from? How many checkpoints has it passed, and how many potential for error did it encounter before it gets into your system? And then it's about applying consistent rules of carbon emissions, or consistent rules of data interpretation before they go out. So we have not defined a consistent methodology for calculating carbon emissions, for example. The Greenhouse Gas Protocol is doing that. It's outlining the calculation methods. And then, of course, you have local and national grid emission factors and things like that. And there are CDPs doing a lot of that. But we do see the need and the value of a framework like GRESB to start calculating emissions in ourselves, so that we ensure comparability. Of course, that comes with a whole set of other challenges, because you really need to have all the details about the different energy types and where do they come from, because they have different emission factors.
Data and real estate, it's a long story, and it's not related only with ESG. And all the topics we are raising, like just getting a definition, you know, it starts with floor space. The definition of a square meter, we've got already a few, and they arrive very late in the game. So I'm not too worried about that. We will progress over time. Perhaps the only thing I will add on this topic of data is, yes, let's start, when you start, let's start with things which are simple. You start with a panel of your portfolio. Don't try to do every asset at the beginning. And you've got obviously the hard data, like energy consumption or CO2 emission or waste disposal or water consumption, this type of data. But in fact, also what I will call the soft data are extremely important. So the ability to understand which action has been taken, the asset management decision, and how it is related to ESG matters. So in fact, it's a full ecosystem, and data governance is quite key in this area. There are a lot of companies which have been created to help us managing the data. And I think, in fact, a lot of them are quite successful in this area. So don't try to do everything by yourself.
But how do you get started, Laurent? Now, you as a big firm, I mean, you have two passes to follow. You set up a new product from scratch. I think that might be more easier to put the ESG design into that whatever asset selection criteria. But then now with the EU regulation coming in, you have existing portfolios, and how do you go about that? Do you perform an analysis of your assets in each portfolio? You might have some assets you can transfer to be more ESG compliant, but maybe not all. So how is that driving a business strategy of an investment manager like yours?
Again, there are different levels of engagement related to ESG topics, which are mainly dependent on what investors want from us at the end of the day. There are certain minimum levels that we need to have, which are defined by yourselves to make sure that we are doing the right things, and obviously by the regulators as well, which are different from one market to another at this point of time. And then you put together your plan. Again, I think what is important is to ensure that you've got clear objectives and that you are able to measure you against these objectives. I said, in fact, the aim is not to do everything and not to be too ambitious at the start. At least to comply with, in fact, your policy and what the regulator wants, and then to progress over time. Regarding your specific questions on type of assets, so obviously when we buy assets, yes, we exclude some of the assets, and when we put together a disposal plan on the fund, ESG is becoming one of the criteria we take into account to decide if we want to sell or not an asset.
When you talk to investors, has awareness raised, or has there been a change in investors' behavior related to product selection?
Yes, more and more. The big institutional investors have, all of them, some very strict rules now. So, in fact, some investors, for example, won't invest in a fund which is not measured by GRESB. So it was already the case a few years. Now, it's not only that it's not measured by GRESB, it's also the fact that, in fact, it should be at a certain level within the GRESB scale. Obviously, it's not everyone in the market today, and there are differences in between the type of institutional investors. The largest are usually the most advanced. The one, if I look at Europe, the one in the Nordic market are usually more advanced than the one in the Southern Europe. I would argue that in Europe, we are probably more advanced than in the rest of the world on this topic. But there is clearly a demand which is growing, and the COVID crisis has, it's a bit early to say, but my feeling is that it's increasing the demand of investors on this type of topics.
And working with GRESB and with LuxFlag, is it increasing confidence from investors? Because you can say maybe with GRESB, that's a broad base of analysis done and coming from investors in investors' interest, and maybe using a LuxFlag label is differentiating your product from the many other products available for investors?
Yes, because in fact, you know, a lot of people are talking about greenwashing, and so it's important to have a third party assessing you on this topic and making sure that, in fact, it's not only words, it's also facts.
Yeah, this is what validated data does. This is what it means to validate information against a set of criteria.
I think Laurent mentioned a very important point about investor demand or investor, let's say, reporting as such. And one of the factors which we also notice is investors are more and more looking for materiality or material factors. Because since ESG has been so important and so popular that everybody is doing ESG, and there are hundreds of those factors being developed and implemented in the process itself, but not every ESG factor is material for every single investment. Right? An investment, a property which is, I don't know, a touristic area property to a residential area property to a commercial property, everywhere the materiality aspects are different. And those, particularly in reporting terms or in data terms, investors are giving more and more focus on materiality rather than just overall general ESG data as such. That's one thing which we notice also.
Would you mean that, okay, investors, they take focus on ESG, environmental concerns and so on. Are they ready as well to accept maybe less performance, or other way around? Does ESG strategy has an impact on the performance output of a fund?
There have been a number of studies available in the market where you would see that ESG and financial performance goes in hand or mid to long term. Of course, ESG is not a short-term strategies where you invest today and you get out tomorrow. Of course, however, over time, ESG performs well and contributes also on the financial side. That's what at least studies show for us, show so far. But Laurent, maybe from your experiences?
Yes, perhaps a few things on that topic. The first one, that it's true that there are more and more studies, particularly on the other asset classes, I should say, for the time being, highlighting the fact that, in fact, it's not one against the other. On real estate, what is clear, and here we've got some tangible facts to prove that, is quite often ESG goes hand in hand with lower vacancy on buildings, with quicker relating of the building. So it's more on the income side for the time being that we can see the link, but I'm sure that it will come also on the value as well. And perhaps the last point I want to add on that is the fact that it's not when an investor is looking at investment, it's not only a story of performance, it's also a story of risk, because the two are interrelated. And here again, ESG clearly is a benefit on the limitation of the risk as well.
So if you would not act, and if you would ignore ESG as an investment manager, you would consider this to be at risk. What's good now might change in 3 years' time, related that you might lose tenants who would go with other competitors providing ESG compliant assets. So you lose the cash flow from tenants and thereof as well value. Is that simplified at that to be looked at?
Yes, and again, in fact, on the top of that, regulation are evolving in this area, and you can imagine that, in fact, some assets in a few years' time will have a value which will decrease significantly, or will require some very significant amount of work to be in line with the regulation. And we know, if I just take the example of carbon emission, we know what is the cost of a ton of carbon today, what will be the cost of a ton of carbon in the future, and it's growing fast. And at the same time, we know that regulation will impose on us the fact that if not carbon neutral, we need to follow a certain rules of reducing carbon emissions. So it's just one example of one specific ESG criteria, but it's important. And so we can, what I mean is that we can quantify more and more what it means to be or not compliant with ESG topics.
Yeah, thanks. Roxana, we dropped the word greenwashing. What do we have to understand by greenwashing, and what should be not greenwashing in that context? How can you help to avoid greenwashing?
I'm trying to think if I know the exact definition. I suppose greenwashing is not walking the talk, if I can say it like that. It's a lot of words that don't really mean anything, are not rooted into any sort of metrics. And I think we've evolved a lot over the past years from the shiny reports that were not saying anything apart from contributions to charities, and the fact that organizations were treating their employees responsibly, to very, very quantifiable metrics and performance against metrics. It is very much about imposing a set of targets or calculating a set of targets for yourself. They don't need to be groundbreaking. They don't need to, organizations themselves, individually, they don't need to aim to change the world themselves. They just need to make the world around them just a little bit better. And if they set very attainable and achievable targets because they are rooted into relevant data analysis, and they actually meet those targets, and all of that information is properly communicated to investors, to the tenants, to the employees, to the outside world in an honest and realistic way, that is the proper way of disclosing and providing transparency on what you do, and that's the opposite of greenwashing.
Okay, thank you. I think I understood that where you both, LuxFlag and GRESB, can help on that. 1 hour flies by so quick. We come to an end, but I have a final question for all of you before you close for today. What's your view? Does COVID-19 and the actual situation impact the further development of ESG for us, or is this a non-event for ESG as it will be focused on anyway? Please, maybe Sachin, if you want to comment first.
In my opinion, the COVID-19 or overall the pandemic situation will result in more attention towards ESG factors, and particularly as quite obvious, the social factors in general, health, well-being of people, of yourself, of your clients, of your employees, of your suppliers. That's absolutely an important factor, and that will be covered more and more. Now, of course, other factors such as how companies are ready for situations like this, disasters type of situations resulting in contingencies plans, how companies are ready towards, let's say, employee treatments or employees which are at risk, or employees which now, for example, 3 months to now working from home or from distance, how companies are ready to handle these type of situations. Those factors which generally you would anyway otherwise consider in the ESG side would be even becoming more and more important. Meaning overall, COVID-19 should have a more, let's say, should result in bringing more attention to ESG factors from the investor side, but also from retail as such, as citizens also. Okay, thank you, Sachin. Laurent, maybe?
Yes, I can only echo what Sachin was saying. In fact, all the ESG dimension will become more and more important in the near future. And there are what COVID has highlighted is probably the fact that some aspects like well-being are also extremely important in the future.
Yes, and of course, I have to agree with all of that. I would also say that this pandemic and pandemics in general will draw attention also to the level of resilience of organizations. Pandemics are a huge social disruptor in the same way that climate change is a disruptor, economic and social disruptor. It's just that a pandemic hits much faster and the effects are much more concentrated as opposed to the effects of climate change, which are more long-term. But they all go hand in hand, and unfortunately, it will draw more attention to this.
Thank you for your view. I have one question coming from the floor. It is focusing on energy consumption and emission. Do you consider good or better indoor air quality monitoring being something you would consider be part of the CSR strategy?
Yes, absolutely.
Yeah.
Indoor air quality, I don't think anybody can say we don't care about indoor air quality. It's obvious you do. And that's also very much linked to productivity, to employee productivity, to employees' level of satisfaction, that if you talk about offices, and generally speaking, to a good quality space and a comfortable space. We can speak more about it, but I think we're out of time.
Well, this brings me to the point to thank you all, my dear panelists, for joining us today in that ESG webinar. I hope for our audience that we brought some sensibility and information across in that 1 hour. We could continue, of course, much longer, but thank you for joining. And I want to thank as well all our supporting members to make it happen that we are able to provide so series of webinars. Please follow us on LinkedIn, and follow us on other social media and our website. We will have more events coming up. You will be informed. And to close now, again, thank you to all, and stay good, stay safe, and hope to catch up with you soon when we are able to see in a physical form again. Thank you.
Thank you.
Bye-bye.
Bye.